Welcome back, listeners. It seems like lately you've been on a bit of a deep dive into the world of investing and the stock market.
Lots of notes, huh?
Yeah, lots of notes, articles,
Mm.
whole bunch of resources all about those topics. And I'm seeing some fascinating stories in here and some potential lessons too. So you ready to kind of unpack it all with me?
Absolutely. Let's sift through these and see what we can find. Sometimes the most valuable insights come from connecting those seemingly random dots.
Okay, well, one of the themes that really jumped out at me from looking at your notes was this whole idea of quitting.
Interesting.
Not in a giving up way, though.
Yeah.
More about the psychology behind knowing when to walk away.
Yeah, yeah.
Have we all been there, right? Like holding on to something way past its expiration date?
Oh, yeah. It's fascinating how often we fall prey to that sunk cost fallacy.
The what?
The sunk cost fallacy. It's where we fixate on what we've already invested, time, money, energy, and it makes it incredibly hard to cut our losses.
Oh,
Even when logic says we should.
makes sense.
Your notes actually have a great quote here that really captures this. It says, "We think that when the world tells us it's time to quit, we'll listen, but we don't."
Oh, that is so true. It really can feel like we're betraying our past selves.
Yeah.
If we admit we made a mistake or that something isn't working out anymore, but hanging on just because we've already invested so much, that's a recipe for disaster.
Oh, especially in the stock market. Yeah.
Yeah,
Think of it like this. You buy a stock, right? And it's plummeting.
Uh-huh.
But instead of cutting your losses, you keep telling yourself, it'll bounce back. I just need to hold on a little longer.
Right.
But what if that company's fundamentals are shaky? Or what if the entire sector is taking a hit?
Oh, yeah.
That kind of stubbornness, that can cost you big time.
It's like being stuck on a sinking ship because you don't want to abandon all the treasure you brought on board. Sometimes you just got to jump ship and swim for shore, even if it means leaving some loot behind.
Exactly. And that's really where diversification comes in.
Yeah.
Just like having a mix of stocks, bonds, and other assets in your portfolio can help kind of mitigate risk.
Yeah.
So does having a diverse set of skills and interests
Right. Yeah.
that can make those career jumps, those big leaps, less scary.
Right. It's like having that side hustle, that you're passionate about.
Yeah.
Makes taking a leap of faith less terrifying because you've got options. Speaking of companies making big moves, you had a bunch of articles in your notes about these return to office mandates. AT&T, Amazon, JP Morgan Chase, they're all wrestling with this in different ways.
It really is a fascinating case study in how companies are adapting or not adapting to this new world of work.
Yeah.
AT&T, for example, is facing a lot of pushback from employees.
Yeah, really?
Yeah, a lot of frustration over the lack of resources, the commutes.
Yeah.
There's even some speculation that RTO is like a stealth layoff tactic.
It does make you wonder if they're falling into that sunk cost trap we were just talking about.
Yeah.
Doubling down on a strategy that's causing internal strife, even if the world's moved on.
Yeah.
What do you think? What's your take on this? Is it stubborn leadership, or is this a miscalculation that they'll eventually adjust to?
It's tough to say for sure, but it highlights the importance of leadership being in tune with employee sentiment.
Right.
And also just the broader shifts happening in the work landscape.
Yeah.
And then you have Amazon dealing with limited office space and employees threatening to jump ship if they're forced back full time.
Wow. And on the other end of the spectrum, you've got JP Morgan Chase going all in on the 5 days a week office return. That seems awfully risky considering all the evidence that remote and hybrid companies are thriving.
It really does make you question their approach.
Yeah.
Are they clinging to a pre-pandemic mindset? Or are they playing a long game that we just don't see yet? It's a good reminder that company culture and leadership style and adaptability, they all play a huge role in navigating these transitions.
Makes you wonder how those factors ultimately impact a company's stock performance, right?
Mm-hmm.
Speaking of big bets, Microsoft's acquisition of Activision Blizzard, that was a massive power play.
Huge.
$69 billion. They went through a whole year of regulatory hurdles, but now they're poised to become a gaming giant.
It's a prime example of how mergers and acquisitions can completely reshape entire industries.
Wow.
And that confidence from Microsoft, it's even echoed in CEO Bobby Kotick's email to employees,
Okay.
talking about accelerating ambitions, creating more opportunities for gamers and developers. It's a very, very optimistic outlook.
It sounds like a textbook case of betting big on the future of gaming. But on the flip side, your notes also mention Tesla's struggles lately. Slowing demand, price cuts, layoffs.
Yeah.
Feels like they're hitting some turbulence.
Tesla's story is really interesting because it highlights the inherent volatility. Yeah.
Of even the most innovative companies. I mean, Elon Musk, he's a visionary, no doubt.
Oh, yeah.
But all his divided attention, between Tesla, SpaceX, and all his other ventures, it does have an impact on the company's trajectory.
It's like a high-stakes juggling act. Can he keep all those balls in the air?
Right.
And how does that uncertainty affect investor confidence? It's a reminder that even the most high-flying stocks can experience turbulence. But there's also that element of hope, right?
Yeah.
Tesla's pushing forward with more affordable models and ride-hailing integration. Those could be game changers.
Absolutely. It's a constant cycle of innovation and adaptation.
Yeah.
And, even disruption. Companies that can stay ahead of the curve, anticipate those shifts, they tend to be the ones that come out on top.
Reminds me of that theme we saw earlier. You gotta know when to hold them, know when to fold them, whether it's a stock or a business strategy. Now, you also had some notes about the pharmaceutical industry in here. Always a hotbed of innovation, competition, and of course, profits. Yeah. The race for weight loss drugs is especially interesting.
Okay.
Novo Nordisk, Pfizer, Eli Lilly, they're all vying for market share in a space with huge potential. And Novo Nordisk is making some serious waves with its pill version of Wegovy. That could be a real game changer.
A weight loss pill. Wow. That is a huge market. But it also makes you think about the ethical considerations, doesn't it?
Oh, for sure.
The pressure it could put on people who are already struggling with body image. It's a reminder that business decisions can have ripple effects far beyond the bottom line.
Absolutely. And speaking of bottom lines, we can't forget about NVIDIA.
No.
I mean, their dominance in the AI chip market has just fueled explosive growth.
Yeah.
And their CEO, Jensen Huang, he believes AI is at a tipping point.
Tipping point. I love that. It really captures the feeling that we're on the edge of something massive, doesn't it?
Yeah.
But from an investor standpoint, how do we translate this excitement into action? Is it buying NVIDIA stock directly or looking at companies utilizing their tech?
Yeah.
That's the kind of deeper dive I'm curious about.
That's the key question, isn't it? It's not just about recognizing trends, but figuring out how to position yourself to benefit.
Right.
And that often requires looking beyond the obvious and, digging a little deeper.
So it's like detective work, but for your portfolio.
Speaking of clues and insights, you also had some notes on the psychology of investing, didn't you? That facial feedback concept was especially intriguing.
Ah, yes. The idea that our facial expressions can actually influence our emotions and decisions.
Oh, no, it sounds kind of strange.
It does. It does. But there's a lot of research to back it up. Think about it. If you force yourself to smile, even if you're feeling down, you might actually start feeling a little bit better.
Okay, so how does that translate to investing? Are we saying a forced smile will guarantee stock market success?
Not quite. But it does highlight how our emotions, even the really subtle ones, can sway our judgment. Fear and greed, that can lead to impulsive decisions, causing us to buy high and sell low.
Oh. Being aware of those emotional triggers, that's crucial for making rational choices.
It's almost like we need to develop a poker face for the stock market. Keep those emotions in check so we can make clear-headed decisions. But there was another psychological concept in your notes that I found interesting. What you resist persists.
Ah, yes. The more we try to suppress or ignore something, the more power it often has over us. And this can manifest in our investment decisions as well.
Okay.
If we constantly focus on negative market outlooks, we might miss opportunities or make choices based on fear rather than logic.
So it's like a self-fulfilling prophecy. We create the reality we focus on. This reminds me of that quote you mentioned earlier, the one about quitting.
Yeah.
Maybe it's not just about knowing when to walk away from a bad investment, but also about letting go of those negative thought patterns that hold us back.
Exactly. It's about cultivating a mindset of resilience and adaptability and even a bit of optimism. I mean, the market will always have its ups and downs, but if we approach it with a positive outlook and a willingness to learn from our mistakes, we're more likely to navigate those challenges successfully.
I like that.
It's all about finding that balance, right?
Yeah.
That a cautious optimism,
Okay.
Speaking of optimism, remember that story about Jensen Huang, NVIDIA's CEO? Remember his wealth jumped by like $10 billion?
Oh, yeah, in a single day.
In a single day. Crazy, right?
Yeah, that was wild.
Yeah.
Makes you wonder if we're all missing out on some secret AI play here.
Mm.
But seriously, what drove that kind of valuation?
Right.
I mean, it's not just about making chips, it's about being at the forefront of this whole AI revolution, right?
Exactly. NVIDIA's positioned themselves as like the supplier of the picks and shovels, you know?
Yeah.
In this modern day gold rush, investors are betting on their continued dominance in a market that's only going to grow.
Yeah.
But as we talked about earlier, every investment has its risks. What if the AI bubble bursts?
Right.
What happens when the competition catches up?
That's the million-dollar question, isn't it? It makes you think about the importance of long-term thinking. Instead of chasing those quick profits, maybe we should be asking, what skills and knowledge will be most valuable in the years to come?
That's a fantastic question. And it's one we should all be grappling with, right? With AI, automation, the rapid pace of technological change, certain jobs and industries are just going to be disrupted. Where do we see ourselves fitting into that, this evolving landscape?
It's like we need to diversify our skills and knowledge, just like we diversify our investment portfolios.
Yeah.
Be adaptable. Be lifelong learners. Always kind of looking ahead of that next curve.
Couldn't agree more. Now, while we're on the topic of adapting, remember Spotify,
Yeah.
their deal with Joe Rogan? Well, it's no longer exclusive.
Oh, all right.
They're letting him go multi-platform, which seems kind of counterintuitive at first, doesn't it?
Right. You'd think they'd want to keep that kind of star power locked in, right?
Right.
But maybe this is them recognizing that wider distribution is the key now. It's about staying relevant in a world that's becoming more and more fragmented.
It's a good reminder that clinging too tightly to old models can backfire.
Right.
You have to be willing to evolve with the market, even if it means disrupting your own business.
Okay. Gotta admit, this next one's a bit of a curveball. You have a note in here about Truly Hard Seltzer launching a, wait for it, hot wing sauce-flavored drink. Is this genius or insanity?
That one definitely caught my eye. It speaks to the power of novelty
Yeah.
and maybe a little bit of shock value to grab attention in a crowded market.
Right.
Will it be a hit? Who knows? But it's it's certainly a bold move.
It is a bold move. Reminds me, you have some pretty bold moves in your investment notes. Some of those stocks, they're definitely not playing it safe. What is it about, are you drawn to that kind of risk-taking in a company?
There's definitely something to be said for companies that are willing to push boundaries.
Yeah.
You know, and think outside the box.
Yeah.
It's a higher risk, higher reward scenario.
Sure.
And it certainly keeps things more interesting.
Speaking of interesting, we have to talk about Tesla. It's been a wild ride,
Yeah.
both in terms of its stock performance and Elon Musk's, shall we say, unconventional behavior.
Oh, absolutely. From those sky-high valuations to sudden price cuts, layoffs, Musk constantly in the headlines. It's a fascinating and sometimes perplexing journey to follow. And then we can't forget about the whole Cybertruck saga.
Oh, yeah.
So much hype, so many delays, and now a recall. It's like a financial soap opera.
It really is.
Yeah.
But amidst all the drama, there are some valuable lessons here. I mean, it's a prime example of how emotion and perception play a huge role in the market.
It's true. Tesla's stock price isn't just driven by financial performance.
Right.
It's driven by Musk's personality, his vision, the whole narrative that's been built around the company.
It's like that facial feedback concept, but on a grander scale.
Yeah. The way a company presents itself, the stories it tells, right? It all influences investor sentiment. And let's be honest, sometimes that sentiment is driven more by hype and speculation than by like cold, hard facts.
Absolutely. It's a reminder that investing isn't always rational. There's a human element at play.
Right.
Driven by emotions, narratives, sometimes even a bit of herd mentality.
But that doesn't mean we're completely at the mercy of our gut feelings, right?
Right.
By understanding these psychological factors, by learning to recognize patterns and trends, I mean, we can make more informed decisions.
Exactly. That's what this whole deep dive is about, empowering you to navigate the complexities of the stock market with more confidence and clarity.
It's about equipping ourselves with the knowledge, the insights, and the critical thinking skills to make decisions that really align with our own personal goals and risk tolerance, right?
And as we've seen from these stories, it's about being adaptable, curious, and willing to challenge assumptions.
Yeah, I mean, the world of business and finance, it's constantly evolving. And those who can evolve with it, those are the ones that thrive.
Speaking of evolving, there's one more industry we should probably touch upon before we wrap things up.
Yeah.
An industry that's experiencing a surge in demand. It's fueled by innovation, but also facing challenges and scrutiny. The world of pharmaceuticals.
Yes. That battle we discussed earlier between Novo Nordisk, Pfizer, and Eli Lilly in the weight loss drug market, that's a prime example.
Totally.
High stakes, huge potential profits. But also, those ethical considerations, we can't ignore those.
It's a reminder that investment decisions, they aren't just about numbers.
No.
They have real-world consequences. Pfizer having to drop development of that promising weight loss pill because of potential liver damage.
Yeah.
That's a stark reminder that even groundbreaking innovations can have unforeseen downsides.
It's a delicate balance, weighing those potential benefits against potential risks, and trying to predict how those factors will play out in the market. It's not just about scientific breakthroughs, it's about navigating regulations, securing patents, marketing those products effectively.
It's a complex ecosystem,
Yeah.
and one that requires careful consideration from investors.
So as we wrap up this deep dive, I think it's safe to say we've covered a lot of ground.
We have.
We've explored the psychology of quitting, the rise and fall of companies, the world of mergers and acquisitions, and that constant push and pull between innovation and risk.
We've delved into the stories of tech titans and pharmaceutical giants, and even that hot wing sauce-flavored beverage.
It's been a whirlwind tour of the business world, but I think we've extracted some really valuable insights along the way. We've talked about the importance of diversification, the power of emotion and perception in the market, and the need to be adaptable and forward-thinking in an ever-changing landscape. And most importantly, we've emphasized the value of continuous learning, staying curious, challenging assumptions. The world of investing in the stock market, it's complex and dynamic, but it's also incredibly rewarding for those who are willing to put in the effort.
So as we approach the final leg of this deep dive, I want to leave you with a question to ponder.
Okay.
A question that builds on everything we've discussed today and challenges you to think about the future of investing.
With the rise of AI and, the increasing speed of all this technological advancement, what skills and knowledge will be most valuable for investors to cultivate in the years to come?
That's the question, right? It's like you're handing us a treasure map and saying, go explore. But in all seriousness, I mean, the world is changing so rapidly. What was valuable yesterday might be totally obsolete tomorrow, right? How do we even begin to prepare for that?
Well, if we look back at some of the stories that we've been discussing today, there's some clues in there. Adaptability, critical thinking, that ability to connect seemingly disparate ideas, those are going to be more crucial than ever.
It's like we need to become like those T-shaped individuals, right?
Yes.
Deep expertise in one area, but also broad knowledge and the ability to collaborate across disciplines. Can't just be a finance whiz anymore. You got to understand tech, psychology, maybe even a little bit of geopolitics too.
Absolutely. I mean, those lines between industries are blurring. The most successful investors will be the ones who can see the bigger picture, right? Anticipate trends and make those connections that other people miss.
And let's not forget about emotional intelligence.
Oh, right.
We saw how Tesla's stock was swayed by, narratives, personalities, hype. Being able to recognize those emotional triggers, both in ourselves and in others, that's a huge advantage.
It's about understanding not just the numbers, but the human factors that are driving that market behavior, separating fact from fiction and making decisions based on, sound reasoning rather than just like knee-jerk reactions.
So it's like becoming a financial detective, gathering intel and analyzing clues and piecing together the puzzle, except the clues are earnings reports and CEO tweets.
Exactly. And just like any good detective, we have to be skeptical and curious and always challenging those assumptions. The investment world is, it's full of red herrings and false leads, It's easy to get caught up in all the hype.
So as you continue your own investment journey, remember the key takeaways from our deep dive today. Be adaptable, be curious, and never stop learning. Cultivate your critical thinking skills, your emotional intelligence, that ability to see those connections that others might miss.
And most importantly, don't be afraid to challenge those assumptions and ask questions and dig a little deeper.
Yeah.
The more you understand, the more confident and informed your decisions will be.
I like that. Well, on that note, we're going to wrap up this deep dive into investing and the stock market. I hope you've enjoyed exploring all these stories and insights with us.
It's been a pleasure.
Keep exploring, keep learning, and keep investing in your own knowledge and your future.